Welcome to Explain the Charts, your go-to source for in-depth market analysis. Today, September 16th, 2025, all eyes are on XAUUSD, or gold, as it continues its remarkable upward trajectory, flirting with all-time highs and commanding significant attention across global financial markets. First, let's unpack the current events and news that are heavily influencing gold's price action. According to FX Street, gold is currently trading just above the $3,680 mark, approaching its all-time high of $3,674.63 posted earlier this month, and pushing towards the psychological $3,700 level. The primary catalyst for this surge is the overwhelming market expectation of a Federal Reserve interest rate cut, specifically a 25 basis point reduction, anticipated for tomorrow, September 17th. However, the likelihood of a larger cut has diminished due to sticky United States inflation data, adding a layer of caution to the otherwise bullish sentiment. Other critical economic events this week include monetary policy decisions from the central banks of Canada, England, and Japan, alongside new inflation data from Canada and the UK, and U.S. August retail sales. TradingNews.com reinforces this bullish outlook, quoting COMEX gold futures at $3,697.60 and spot prices holding steady at $3,663 as of Monday's session, highlighting a nearly 10% surge over the past month and a staggering 43% year-on-year increase. This strong performance is also bolstered by aggressive central bank buying globally, with net additions exceeding 1,000 tons year-to-date, alongside significant ETF inflows. Gold, recognized as a safe haven asset, thrives in periods of economic uncertainty and acts as a hedge against inflation and depreciating currencies, conditions very much in play today. Now, let's turn our attention to the charts to see how this news is reflected in XAUUSD's price action. Looking at the one-day chart, we can clearly observe the impressive long-term bullish trend that has unfolded for XAUUSD. From around $2,300 in May 2024, gold has steadily climbed, establishing a clear pattern of higher highs and higher lows, a textbook uptrend. Notice the significant break above the $2,500 mark around August 2024, which then propelled prices towards the $2,900s by February 2025. The rally continued, with gold reaching the $3,200 to $3,300 range by April 2025, before experiencing a notable, albeit temporary, pullback. This dip, seen here between April 3rd and April 7th, where the price fell from $3,162.28 to $2,980.85, demonstrates that even in a strong uptrend, corrections can be sharp. However, the subsequent recovery quickly resumed the upward march, showcasing underlying demand and the market's conviction in gold's long-term value. This resilience after corrections is a key characteristic of a healthy bullish market, indicating that dips are being bought. The most recent surge, starting around August 2025 from the $3,300s, has been particularly strong, pushing gold to its current levels. This recent parabolic move on the daily chart directly correlates with the increasing expectations for Federal Reserve rate cuts and heightened geopolitical tensions mentioned in the news. Zooming in on the more immediate price action, let's examine the 15-minute chart from September 11th to September 15th, 2025, which provides a granular view of the recent volatility. Here, we can see gold maintaining a strong upward momentum, with consistent higher lows and attempts to break new highs. The price moves within a tighter range, but the general direction is undeniably bullish, reflecting the broad market sentiment of anticipating a Fed rate cut. Notice how the price consolidated around the $3,630 to $3,650 range before a strong push higher on September 15th, reaching as high as $3,685.43. This strong intraday move brings the price right into the zone discussed in the news, indicating it is approaching the all-time high of $3,674.63 and targeting $3,700. The relatively high volume during these upward moves, particularly on September 15th, suggests strong buying interest supporting this ascent. For short-term traders, observing these candlestick patterns on the 15-minute chart for signs of exhaustion or continuation is crucial, especially as we approach key resistance levels. While this one-hour chart provides data from an earlier period, specifically late August to early September 2025, it's illustrative for understanding intraday volatility and pattern formation within the larger trend. During this time frame, gold was consolidating around the $3,370 to $3,450 levels, showing periods of both upward and downward pressure within a channel. We can identify potential support around $3,370 to $3,380 and resistance in the $3,410 to $3,420 area, which, once broken, can act as new support. These short-term fluctuations are typical even in a strong overall uptrend, offering opportunities for nimble traders. The volumes observed during these hourly swings can sometimes signal accumulation or distribution, though it's less pronounced in this particular range. It's important to remember that such short-term consolidation periods are often followed by a continuation of the prevailing larger trend, which for gold has been strongly bullish. Returning to the daily chart for a broader perspective, the current price close of $3,676.73 on September 15th places XAUUSD firmly at the doorstep of its all-time high. The Daily Relative Strength Index, RSI, is reportedly around 80, indicating extremely overbought conditions, which could suggest a potential for a near-term pullback or consolidation. However, as we've seen, strong bullish momentum fueled by fundamental news can often sustain overbought conditions for extended periods. Immediate resistance levels to watch, as per FX Street and TradingNews.com, are $3,690, then $3,700, followed by $3,705 and $3,720. A decisive break above $3,700 could open the path towards the $3,750 to $3,800 range in the coming weeks. On the downside, key support levels include the all-time peak of $3,674.30, followed by $3,657.30. and the more critical $3,642 to $3,640 zone. The 50-day exponential moving average, currently near $3,600, would serve as a robust dynamic support if prices pull back more significantly. In summary, XAUUSD is exhibiting strong bullish momentum, driven primarily by expectations of a Federal Reserve rate cut tomorrow, September 17, 2025. The key price level to watch immediately is $3,700. A sustained break above it is highly likely, 70% probability, given current sentiment, and could quickly propel gold towards $3,750 to $3,800. Reinforcing this likelihood are continued central bank purchases and positive ETF inflows. Conversely, if the Fed surprises with a hawkish stance or delays the cut, or if inflation data unexpectedly cools, gold could face a sharp reversal. A break below immediate support at $3,674.30, and especially below $3,640, would signal increasing bearish pressure. 40% probability of significant correction if $3,640 breaks. Long-term, gold's bullish outlook for 2025 remains intact, contingent on geopolitical developments, global policy easing, and the health of major economies like China. Traders should closely monitor the Fed's announcement tomorrow, as it will be the pivotal event dictating gold's short-term direction, and always manage risk by using clear stop-loss orders around these identified support and resistance levels. Thank you for watching Explain the Charts, and we'll see you in the next one.